In the last video, we talked about how financial statements are simply tools to help you make smart business decisions. However, for those tools to be useful, they must be built on solid ground. And the building blocks for your financial statements is your chart of accounts. So today we're going to talk about the chart of accounts for the balance sheet. You can think of your chart of accounts as the things that you need to track in your business to determine where you're making money, where you're spending money, where you keep your money, and to whom you owe money. And your chart of accounts needs to be tailored to your specific business. What you need to set up in your chart of accounts are the specific individual items that you want to track in relation to the categories that make up your financial statements: assets, liabilities, equity, income, and expenses. So if you have specific accounts in your chart of accounts for each of those categories, you'll be able to make better business decisions. For the balance sheet, you will have a list of accounts that make up the sections that I mentioned previously: your assets, your liabilities, and your equity. With your assets, you'll have your cash accounts, like your operating account, checking and savings accounts for your business. You'll have items that represent value of things that you own, like buildings, land, and equipment. You'll have computers and furniture and vehicles that you use in your business. You'll even have intellectual property that's intangible assets. For instance, the value of copyrights or trademarks or patents. And you'll also have an intangible asset called accounts receivable, which represents what other businesses or people owe your business. That's an asset on your books. And then you may have things like inventory if you sell products. So that represents the value of the items that you have on hand that you plan to sell at a later date. For the liabilities, that's going to show what you owe other people or businesses. So the most common liability is accounts payable, and that shows what you owe those people or those businesses. You may also have bank loans that are in your long-term liability section of your balance sheet. So loans that you have on vehicles or small business loans. You may have salaries that you have not yet paid, but your employees have worked and earned. You may have interest and taxes owed. So be thinking about the things that you owe money on at the end of a specific period. Those are the things you want to track in your liability section. Your equity section includes an account that represents your investment that you have made into your business. So money that you've put into the business or assets that you've contributed to the business. That's called owner's equity, or sometimes called paid-in capital. And if you have more than one owner, you want to have a separate owner's equity account for each owner so that at any given time, you can see the contributions each owner has made to the business. You may also have common stock if your company issues stock to owners or employees, and that just shows the beginning value of the stock that was issued at the beginning of the company. And then also in the equity statement, you have retained earnings. Retained earnings is the cumulative running total of profit and loss that the business has made since the beginning of time for the business. So those are the things that you're going to set up a chart of accounts for the balance sheet.